Boom. All right, what's up, you guys? It's Roy, it's Jacob. Welcome back to the channel. In this video, I want to talk to you about what I think you should be looking out for as we head into the first trading week of May. Now, as you all know, April was an absolute roller coaster, and last week alone is probably the most volatility that I can recall experiencing in the equity markets since the lockdown started in March of 2020, over 2 years ago now. And although I do think things will start to ease up over the medium term, I do think more short-term volatility is ahead. I do think the equity markets will see more downside Monday, Tuesday, even though the crypto markets are up. We'll talk about that, of course. But I do think more downside lies ahead for the equity markets. And I want to talk to you guys about why I believe that. All right, so before we go over all of the tabs we'll be discussing, please give the video a like because it is greatly appreciated. Subscribe to the channel if you're new around here and want to catch more content like this. And let me know in the comments down below if you happen to be part of the portfolio newsletter group, if you hopped on those put options with me, if you hopped on some short positions with me, and you were eating good on Friday. Cheers to you. Let me know in the comments down below once again. That said, let's get into some of the tabs I want to share with you, some of the articles I want to read over, and then we'll dive into each one individually. All right. So in front of us is TradingView. This is what we will be covering last. So Bitcoin, again, Bitcoin, Ether. Big shout out to Render. We'll talk about a little more about Render as we progress through this video, but Bitcoin looking decent on this Sunday afternoon, although I do perceive crypto as the true futures market, as the true equity futures market. I do still, as I just said, think that there's downside in store for the stock markets, even though the crypto markets are looking good. And honestly, because I'm recording this video just before noon Hawaii time on Sunday, this could be a completely different picture by the time you guys watch this later tonight, or maybe even tomorrow morning, Monday morning. Okay, so we will talk about Bitcoin. I'll give you guys my quick take on Bitcoin to close out the video. But first, we got to talk about some fundamentals and things that, once again, I think you should be keeping an eye on this week. Kicking it off, we're talking some earnings. So Earnings Playbook, your guide to next week's biggest reports featuring AMD, Uber, and others. So we will go over the earnings. We're not going to get super deep, you guys. I'm not going to go in depth on my opinion on how these companies will perform post earnings, but I just want to put some of these guys on your radar and just let you know what to look out for once again. After that, we will be talking about what I feel is probably the most significant, and I mean, many investors feel this way. What I feel and many others feel is the most significant fundamental catalyst taking place this week, and that is the Fed meeting, April jobs report, and what to know in the markets this week, as the Yahoo Finance article states. But Tuesday, Wednesday, the Fed are meeting up. They will, I mean, all eyes are going to be on the Fed in the Tuesday, Wednesday meetings, and of course, what the results of those meetings are. So we'll go over this quickly. Again, just put this on your radar. Of course, we won't know the outcome of this meeting until Tuesday, Wednesday, until later Wednesday, actually. So yeah, again, just putting these on your radar, just reminding you to stay on your toes as we kick off the month of May. After that, that's kind of that's the bulk of the fundamental catalyst going into this week as in terms of the equity markets. And then to segue into Bitcoin, I do want to cover this article. I'm sure some of you have seen this by now, but this is definitely going viral in the crypto community. Warren Buffett gives his most expansive explanation for why he doesn't believe in Bitcoin. So I do recommend you guys go check out this whole thing. Even if you're a Bitcoin bull, like I am, of course, it's always important to be able to argue for the opposition. Okay, that's debate 101 right there. You want to be able to argue for the opponent as well as they can. Okay, and that's how you can truly win. Okay, is understanding the other side. Okay. So we'll read over this, you guys. I'll give you guys my quick take on what I thought of some of Mr. Buffett's words, the Oracle of Omaha. You guys know I quote him a lot. If you don't respect Warren Buffett as an investor, you got to get out of the markets because you don't understand this game and you're a little too new. So you know what? That's okay. If you're new and you don't respect his words, you're going to learn. But again, Warren Buffett, one of the greatest investors, proven of all time. And it's interesting to hear his take. I mean, little heads up, I do think that this is just an old man's take, but that's all right. He's an old man. So I'll cover this, give you guys my quick take on that, and then we will close out the video once again talking Bitcoin. And shout out to Render, you guys. So I do want to I just shout this out, just a little pat on the back. And again, shout out to you guys if you hopped on this one. This is from a little Saturday special crypto convo that I sent out to the newsletter group yesterday. First off, I want to say just bought significantly more Render, so I bought about 10K more Render here at a price of 125. Render now consumes 50% of my entire portfolio. So if we dive back, Render currently sitting at $1.52, up 26%. I mean, I remember waking up to my phone or just seeing my phone last night right before I was going to bed. It was probably like, 3 a.m. It was probably like midnight Pacific time. Regardless, last night before going to bed, I just checked my phone. I got the alert. Render is up like 30, 50%. Render at one point was up to like $1.80, I think. That was the high. And it's just crazy to see Render. I'm not going to be taking a look at the charts today. I will include it in the newsletter tomorrow. We can catch up on what it's doing tomorrow morning. But huge shout out to Render, you guys. And again, shout out to you if you dove in and you bought that dip at 125. Okay, so that said, I do also want to kick it off by reading Friday's newsletter, the intro, at least part 1 of Friday's newsletter. Just cover pretty much all my thoughts regarding the macro, and a lot of these thoughts still hold true heading into this week, obviously, because it was the weekend and we've got a big week ahead, okay? Again, all the macro fundamental catalysts are still absolutely in play. So, happy Sunday, fam. It was the final trading day of April. We're going to adapt this a little bit, and I'm thankful to say that we're stepping into the month of May on a strong foot. This past week has been the most volatile in recent memory, so it's no surprise that the equity markets are closing it out in the red. It's especially unsurprising considering both Amazon and Apple fell short of earnings yesterday. At the time of writing, Amazon down over 14%. This is a staggering drop for a company worth trillions of dollars, and this is the type of event that can create for fear outside of the markets. Even if you're not an active investor, reading a headline like Amazon shares fall 14%, bringing down the markets with it, will want to make you rethink your 401k holdings. I can guarantee that there are a flurry of panicked average Joes reaching out to their wealth managers asking for liquidations today. On top of all the very tangible economic headwinds, there's now even more uncertainty present, and investor sentiment is objectively fearful. The S&P 500 Fear and Greed Index is currently sitting at 30. You can see that right, which is approaching levels of extreme fear, but we're not quite there yet. Unfortunately, I do think we need to see that 15 to 20 level prior to finalizing this correction. And I say that because I've been involved with the Bitcoin for so long. I shouldn't say every time. We've looked at the S&P Fear and Greed Index a few times on this channel, but we've definitely looked at the Bitcoin Fear and Greed Index significantly more over just the history of me making videos and talking to you guys. So when Bitcoin sees a correction, when you see a hype cycle, a growth cycle pop, you usually need to see that extreme fear gauge. Even if it's just scratched, you need to see it touched prior to really finalizing that correction. I do still think, and that is one of the many reasons I still believe more short-term downside is ahead for the S&P. Come down here, scratch that 15 to 20 level, and then bounce back into fear, and then slowly make our way back up to the greedy levels, okay? So I remain bearish on the markets moving into the new month. Think we'll probably have another week or two of fear-driven downside price action. That said, I'm hedging my shorter-term put options with these longer-term call positions in the case that growth stocks see their well-deserved reversals. When there's this much fear present, that scenario is unlikely, but that's why I'm deeming them as hedges for the moment. Okay, so again, you guys, I'm sure a lot of you, obviously if you're part of the portfolio newsletter group, you know what these call options are, but you know what? If you do want to know, check out the Complete Portfolio daily newsletter on top of getting one of these bad boys and sometimes some bonus ones. Again, that Saturday crypto convo. Shout out to Render again. If you want those daily newsletters in your email inbox every trading day during market hours, along with the complete breakdown of my entire personal portfolio. Do update this every trading day. And I do let you guys know why I'm trading the way I'm trading, why I'm making the trades I'm making, when I'm buying, when I'm selling, when I'm shorting, when I'm taking longs. Every single position in my entire portfolio, call options, put options, stock positions, crypto positions, you name it, it's in there. 50 to 60 positions at any given time. And again, I do send out one of these bad boys on top of that. That's all for a price of $15 a month, which, again, I'm biased. I think it's a steal. You be the judge of that. So unsubscribe if you don't like it. That's perfectly fine with me. But check it out. First link down in the description box below. $15 a month, $40 for every 3 months. Appreciate it if you do. But if not, your loss. Let's get into the video. Okay, we'll take a look at Bitcoin. At the end, Bitcoin, I mean, looking pretty good right now. So it will be interesting to see. I'll hop into the comments after this is uploaded and whatnot to kind of catch up with you guys on that. Maybe hop into the Discord channel as well if you want to join that. Links down below too. But again, let's kick it off with some of these earnings reports. Okay, the earnings season starts winding down this week, but there's still some key companies slated to report. Investors will hear from companies such as Pfizer, AMD, and Uber. It's been a mixed reporting period thus far for companies. On one hand, 80% of the S&P 500 companies that have reported have beaten analyst expectations, according to FactSet. On the other hand, there have been some big downside moves on earnings from major companies such as Netflix and Amazon, which got, I mean, a few of the fangs have gotten absolutely smoked. Okay, Apple's kind of the one last man standing there, but I still do think, personally, that Apple will see more short-term downside. Okay, the war isn't over till the generals. Okay, so Pfizer Tuesday. Tuesday is Pfizer and Starbucks and Airbnb. So I mean, Tuesday is actually the most stacked, so keep an eye out for Tuesday. Tuesday, Pfizer, Starbucks, Airbnb, AMD. Wednesday is Uber and Etsy, and that's pretty much it. So that was quick, but again, you guys just keep in mind, Tuesday is a big day of earnings. Do any of these, so they all report after the bell. That means that there's going to be a lot of volatility on Tuesday in preparation for what these earnings will bring, and if they will further blunt, or if they will, create a more optimistic investing environment. Okay, so keep an eye out for those big earnings on Tuesday. Tuesday after market is going to be a very significant time for the markets. Boom, right there. Perfect breaking news just in time. We can take a look at these futures real quick. So stock futures inch higher after let's read this. U.S. stock futures inched higher overnight trading Sunday. So again, that makes sense. Crypto is looking strong right now. Futures just kick it off. Crypto is usually the futures market, but I will say right now, you guys, if the market bounces, which I do think is likely, I actually do think a market open, there will be a pretty significant bounce. But also what I've learned, just look at the SPY, look at any given day. The way the day kicks off almost always results in the opposite ending to the day. Okay, so if we start the day off high, that's probably a good sign that the market is going to close the day low. And in terms of trading, I'll let you do with that information what you will. But if the markets kick off, I'll personally be loading up with more puts. Okay, so again, check this out if you want to know exactly which puts those are. Stock futures inching higher. But again, you guys keep an eye out for those earnings. Let's talk about some of these jobs. Just this Fed meeting, which is super important. Okay. After a brutal month for equity investors in April, May is kicking off with a host of major market events that could further stoke volatility across risk assets. One of the focal points this week will be the Federal Reserve's May monetary policy meeting, which will take place Tuesday and Wednesday. Market participants expect at the conclusion of this meeting, central bank officials will opt to raise interest rates by 50 basis points, representing the first hike of more than 25 basis points since 2000. And you guys, the dot-com bubble, that's what happened in 2000, okay? I'm assuming if you've been watching content lately, you've been hearing a lot of dot-com bubble references to what's happening right now, and that absolutely holds true. Investors also expect the Fed to formally announce plans to start rolling assets off the central bank's balance sheet, beginning the process of quantitative tightening. Quote, "We are really committed to using our tools to get 2% inflation back," Jerome Powell, Uncle JP, said during a public appearance with the International Monetary Fund earlier this month. "It is appropriate in my view to be moving a little more quickly, and I also think there's something in the idea of front-end loading that points to the direction of 50 basis points being on the table." Okay, so front-end loading means they want to get it over with. They want to get this over with as fast as possible. The Fed, I do not envy the job of Mr. Jerome Powell one bit. This is a very tough job. If they raise inflation too much, they are going to plunge the economy into a recession. But if they don't, inflation is just going to continue to get higher and higher. So they dug themselves in a hole. But again, there's no free lunches. They are going to have to dig themselves out of it. That's the reality of the situation. But again, you guys, just because there are so many just shitty economic catalysts that are playing into the equation right now, you're probably going to get a shitty answer, right? So that's my just general take. Bitcoin, I will say, Bitcoin has been holding up very, very surprisingly well, and it's super impressive to see what this asset has been doing and truly proving itself as a chaos hedge in the times of uncertainty. Same as Ether, I guess. I mean, Render too. Ape is falling off a cliff. All that capital is going straight into Render. Let's get it. But I'm again, you guys, Bitcoin itself, Bitcoin obviously is the most parallel to gold, is digital gold. I made a video probably actually over a year ago now. You guys know I made over 500 videos. I completely missed it. I was like, I wonder if I can make like a 500th video special. And then I went and checked, and I have like 600, like mid 600 something videos. So missed that. But way back when, I did make a video saying, talking about how Bitcoin is gold 2.0. Go watch that if you want the full analysis on that. But Bitcoin gold 2.0, it makes sense that it is consuming gold's market cap in times of uncertainty, is acting as that chaos hedge and inflation hedge at the same time. And it is holding up. It has held up. It's like it's been going sideways as the equity markets have been falling off a cliff. So that's very impressive to see. But I will still say, just given the macro, it's irrational. I will say it's irrational, in my opinion, not to be bearish on this asset. Of course, Zig, when the market zags, everyone's feeling bearish. You should be bearish. But the reality is, you guys, again, and Bitcoin may consume capital, may take the capital outflow from equities and act as that chaos hedge. That is also very possible. But just looking at the tape, you guys, Bitcoin is not looking too good. I'll give you guys the TA breakdown to close out the video after we read through this, but we should read through this quick. Bitcoin has steadily been gaining acceptance from traditional finance and investment world and the investment world. And investment world in recent years, but Warren Buffett is sticking to a skeptical stance on Bitcoin. He said at the Berkshire Hathaway annual shareholder meeting Saturday that it's not a productive asset and it doesn't produce anything tangible. Despite a shift in public perception about the cryptocurrency, Buffett still wouldn't buy it. Quote, whether it goes up or down in the next year or 5 or 10 years, I don't know. But one thing I'm pretty sure of is that it doesn't produce anything. Buffett said it's got a magic to it, and people have attached magic to a lot of things. Okay, so on one hand, I get exactly what Warren Buffett is saying, because that is true. Bitcoin doesn't produce anything. You cannot make anything with Bitcoin. Bitcoin is just a globally understood store of value at this point. I shouldn't say globally, but amongst its investor base, obviously, Bitcoin is well understood as a finite asset, as an absolutely scarce asset, as a sound asset. And that is why investors around the world deem it to be a sound store of value. So Bitcoin is a store of value. Bitcoin does not provide Bitcoin does not produce anything, as he said. That is a fact, okay? But plays like Ether, plays like Render, those do produce something, okay? Ether is gas. Ether is the underlying layer of Web3. Render will one day, again, hopefully power a lot of, is the next cloud, is the first scaled cloud solution for crypto, first decentralized cloud project, which is freaking huge. Again, referencing back to AWS, Microsoft Azure, Google Cloud, they're all huge businesses, and Render will inevitably consume some of that market cap over time. Maybe not today, maybe not tomorrow, probably not, very likely not today or tomorrow, but over the years, Render will be, Render is a force to be reckoned with, absolute sleeping giant here. So again, shout out to Render, shout out to all of you who bought it at 125. Again, as we close it out, let me know in the comments down below if you're eating good off some of these calls lately, but close it off. Sorry for the tangents. Close it out with the Bitcoin analysis. Right now, Bitcoin is bouncing nicely off a very significant line of resistance. I have been believing for a while that Bitcoin would come down to test this sign line right here. Boom, touch point, January 24th, touch point right here. Absolute candle wick lows, which is kind of, I don't usually like using the candle wicks like this, but it did perfectly come into play just here. As we zoom in here, we did break a little bit below it, but we have not yet closed the daily below it or a 4 hour below it at that. But that said, Bitcoin, from a bear's perspective, is still in a very strong descending, kind of a descending channel, descending wedge formation here. And we are coming up to such significant levels of support. So I will say, Bitcoin, if Bitcoin does test the line of support on this descending channel, it would break the support on this kind of ascending channel it is, on this longer term ascending channel. If Bitcoin does break below this and close the daily below the sign trend line, that is very bearish. If Bitcoin breaks below the line of support on this descending channel, shorter term, that's very bearish. And if Bitcoin breaks significantly below this previous low right here, which I would mark it as about 37K, that is very bearish. So if Bitcoin breaks below $37,000, that would signal 3. Going for the hat trick, that would signal the hat trick for the bears, right? That would signal 3 extremely bearish indicators on top of the daily RSI still being below its exponential moving average, and the daily RSI is pretty much going sideways, but it did just curl to the downside. Okay. So although Bitcoin is again looking great now, getting to its daily high as we speak, I am still hesitant about this asset moving forward. But hey, again, zig when they zag, everyone's bearish. It could absolutely run to the upside too. As far as upside is concerned, I won't be truly bearish, or I won't be bullish, I'd say, until this high is broken right here. If Bitcoin can see $43,000, I will start making bullish analyses. But until then, there's just so much fog on the horizon that, again, it's just irrational to be bullish over bearish at this point. Okay, so we'll call it a day there. Hope you guys enjoyed the video. Look forward to talking to you guys in the comments down below. And I look forward to an exciting week ahead. So, till then, always remember, take action, make waves. Peace.